autonomy will definitely happen. Like there's absolutely no doubt. What are they going to learn from you? And I've had young founders ask me that question before. My expectation is the head of design at Applied is the best designer at Applied.
Hey, this is Daniel Qasar. Today we have Qasar, who I've known for years. I'm going to give a little bit of background, Qasar, on who you are, and then we could just dive into questions. We have three hosts with me. So we have Dan and then Harshith. I'll start with something really fun. And this is just, I don't know if I could share my screen, but I'm going to try to. Let's hit share.
Do you have an old photo or something?
I have an old photo here.
Oh man, I guessed it. Look at that. It's back when we were children. Oh, look at that.
Have you
Classic.
seen these? Like, so here's you.
Yeah.
There's
Oh man.
me.
More hair, younger, you know.
There you are, right there.
Yeah.
And this is the old days. So
This is
this
the
is
old
like,
days. This was all of YC, literally. And this room actually looks bigger in the photo than it actually was. It only went, I think, 2 or 3 rows deep. For all the current YC people, you guys are in this big building across the street. This is the old building, which had the side room, and it was much smaller.
I mean, this is like the old days, but just some history on you. Like we'll go into like the background, but like you were basically in the thick of it, in the mecca of YC.
Yeah.
Like, here's Sam Altman from OpenAI. Here's the founder, Jessica Livingston in OpenAI.
That's me with the hair, by the way, if you're wondering who that is on the left. That's me with hair. That's why it's hard to
There you go.
it's hard for our AI overlords to do object detection. My face is so different now.
We went through YC together, and you were probably one of the people that stood above like the crowd. Like we met like all these entrepreneurs. There was like, I don't know, 42 companies in our batch, and there was just so many people. I don't know, there was something inside of you that made you different. And I'm like, you're going to do something. And I didn't know what.
Overwhelming insecurity, I think that's the word. I mean, for me, I was a big fan of Silicon Valley history for a long time, long before, probably 10 years before I came to the Valley in my late 20s. For me, not only being in the Valley, but also being at YC was like a super special thing. Now, you got to remember the 2010, 2011 era of YC is very different than the 2025 era of YC. And at that time, multiple people told me, don't do YC. And not for the reasons that people say don't do YC now. Now people say don't do YC because they're like, there's too many companies or something else. At that time, they're like, oh, it's not good enough. And it's like, I think for us, Daniel and I and the batchmates at the time, I think we made the right call, obviously, by doing it because it certainly was good enough. It was more than good enough. And then, so YC's gone through this weird inflection where it's like, for a bunch of years, considered not good enough. And then had this sweet spot where it was like super hot. And then it was like, okay, now the batches are too big. And I like to say the sweet spot is when Sam and I were, running. I see it's not really the case. It's just the batches were, about 100 companies, which is kind of manageable. And like for your mind as a founder, you can understand meeting maybe most of the companies.
I mean, I want to bring this up also. Like, I noticed Applied Intuition like had a lot of influence from YC. Like, you literally hunkered down right next to it, which is really smart because you can literally get all those smart founders and like have information exchange from like YC. And I think like you probably did that intentionally, but like I probably have this assumption anyone who's near YC proper is likely to be more successful as a founding team, as a startup, because they get that inflow of like people coming in.
I mean, for us, I mean, I would like everything. Partly skill, mostly luck. The building was available, and that really helped. Like if there wasn't an office building available, we wouldn't be next to YC, but it was. But the probably the bigger thing for us actually before YC, by the way, or before and after, depending on how you look at it. After I was a founder, before I became an employee, I was at Google, and because the last company was acquired by Google, and my YC company, and Mountain View is the universe of Google. I mean, in the way that it's like this gargantuan, black hole of engineering talent, and so. Even when the company was like probably 400 people, over half of Applied was ex-Google. So we recruited a lot out of the Mountain View Google ranks. And, Google is so big with like 10,000 people coming in and out every quarter that a few hundred people is they don't even notice it. They can't even they can't even measure it. But for us was massive because for all the dismissives people have of Google, even today in 2025, it's a fantastic software engineering culture, and it's just like good hygiene on how to write software, how to write documentation, how to write tests, the infrastructure, tooling, the emphasis on teaching and mentoring, all of these positive things which create a really world-class software engineering organization, I think for us was like a big deal. On the YC side, where we were more influenced was honestly was on hiring founders. And I think today we have something like 40 founders who, and a bunch of them are YC, like at least, I gotta say at least 5, probably 10 ex-YC founders who work at the company. I mean, I can count 5 off the top of my head, so it's like probably more than that. Applied, by the way, is like almost 1,000 people too now, so it's like a larger organization in that sense. But yeah, we've in the way that YC really influenced me, aside from learning so many things about how companies work at scale and seeing the Cruise grow and seeing Checker grow and seeing GitLab grow and seeing DoorDash grow and seeing Coinbase grow, like all these companies grow, albeit from a distance, but still close enough where you can glean some lessons. Definitely had an influence on Applied, like of what things we should do and we should do. And one of those things, I'm still long on South Bay, even though YC is since.
Another question for you, like you said something really fast, is like you were scared or something like that. That's why you stood above the crowd. Let's get into your psychology a little bit. You drove out to Silicon Valley from a normal job, I'm assuming.
Yeah.
And then like, why the hell would you do that? Why? That has to be crazy.
I think it is and it isn't. It isn't in the sense of, venture-backed companies are not that risky, really. I mean, you get paid a salary, and if it doesn't work out, nobody like tar and feathers you, and you don't get a worse credit score or anything like that. So that is not really. I mean, it's actually a lot more risky to like start a laundromat or a restaurant. Like you're really putting a lot of your own life on the line and your personal, literally financial health. So in that way, it's not very scary. And the way that it's scary is you have opportunity costs to do other things. It's kind of like when I left YC as a partner and COO.
Which is crazy, leaving YC.
Yeah. And it's funny because I mean now I'm certainly not the only partner who's left and started a company. It's almost like the rite of passage of being a YC partner at this point, where I would say more people have left and become a founder again than have stayed. A lot of that is, just as a side tangent, part of that is just the psychology. When you evangelize starting companies all the time, you start thinking about starting your own company yourself. But in terms of going back to the original point of risky and not risky, so in the sense of it's not risky, it's venture backed. In the sense of risky is you have opportunity costs, and at that point in my career, I had a bunch of debt. I'm an undergrad. I went to the General Motors Institute. Grad school, I went to Harvard, and my last year, GMI is a private engineering school, and my last month of paying my loans, I had to pay myself through undergrad and grad school, but just the nature of my upbringing. And so the last month I had debt from undergrad was right when I got into business school, and then I'd finally paid everything off, and then boom, I take on a couple $100,000 of debt again, which is an enormous sum of money for me personally, and so. For me, doing YC quitting my job and doing a startup and therefore YC, I think the more risky thing was like I got this debt on my head and I got to service this debt somehow. But calculated risk, I'd say, it saved some money. I knew I could make the payments, and I think like for a lot of people who are, want to be founders and are working at, let's say, at another startup or working at a big tech company or in school. Those tactics you really got to figure out. Like, how am I going to take the first, second step? Everyone gets caught up on because all the content is around like scaling companies and what culture of a company. Those things are important, but you got to get you have to first quit your job and find a co-founder and get funding. Then it's not scary. You've gotten over the most scary part of it. I would say the scary part is overemphasized. I don't think it's that scary. Now, if you're starting a restaurant, that's scary.
Restaurants, they have something like what, a 3% success rate? Is that right?
Any business that actually doesn't have a financial backer, it's gonna be difficult. And a financial backer, I don't mean by like your parents or your uncle or something like that giving you money. It's like a professional investor, because what's actually happening in that is the professional investor is also vetting independently your idea and your approach. So you're getting some validation there. you know, people make this missive like, oh, there's so many venture funds now and so many seed funds. It doesn't really matter to get funded. I agree. There's lots of venture funds, lots of seed funds, and it's easier to raise money today than ever before. But it's also signal. If you can raise money, it's a positive thing. That means somebody independent whose only motivation is money is not rather than, hey, this is my son and I really want you to succeed and go ahead and do this thing. So yeah, so if you can like so if you did the restaurant but you raised it from like professional capital, I bet you that hit rate is probably a lot higher.
So on the topic of investing, one of the YC partners' superpowers is to pattern match. How have you carried this superpower back into the founder role? What does that look like?
Yeah, it's a phenomenal outgrowth of YCs. You get to see lots of companies. I think the let's say two or three things that pop in my mind from that carried over to applied from that pattern matching thing was one was, and I would say this carefully because I don't want people to over index on this, but like the good companies are kind of good right away. They generally, and the key word is generally underlined and italicized. They're not spending 3-4 years trying to find product market fit. They find product market fit actually a lot sooner than that. And product market fit's an ephemeral thing. It comes and goes. Applied could lose product market fit, or we have dozens of products, so each product is at a different level of fit. So it's not like a binary thing. It's a spectrum. But I think that is a thing that I learned. I also learned that like the talent density concept. I think the reason why a lot of YC companies have a difficult time doing that is because the founders themselves are not ones that are going to attract talent. It's not just that you raise money from YC or Sequoia or Andreessen or General Catalyst or whoever, Lux or whoever it is. That's not enough. Because there's so many companies that are funded by Kleiner, and there's so many companies that are funded by Andreessen Horowitz and GC. So it used to be something like 10 years ago, especially 15 years ago, raising a Series A by a notable brand was enough to start getting like the magnet of talent would start coming, it's working in your favor. Now it's like you yourself are the product as the founder. And the disadvantage when you're very young is if you're 22 or 23 years old, how do you take a 28-year-old or 32-year-old or 38-year-old software engineer who's worked and has real experience to come work for you? Like, what are they going to learn from you? And I've had young founders ask me that question before, which is like, hey, raise $150 million, but still having a hard time recruiting senior engineers unless we pay like ungodly amount of money. And it's like, because ungodly amount of money also means you're probably going to fail as well. Like if you're not thinking about compensation and you're not being disciplined about compensation, it's a leading indicator that it's gonna burn you. And compensation, just to make sure we double click on that, is there's two different. It's cash and equity. What you want to do is you want to be disciplined on cash, and you're okay to be liberal on equity. Or even if you're disciplined on equity, when equity grows, it's very liberal. The outcomes are higher than the person would have made in a similar scope and size job. So the incentives work out for everybody. So I think that's number two, is like somehow getting talent density via recruiting as a founder. Third, I would say thing I learned from the YC pattern matching ecosystem is once you become like the company that's kind of everyone thinks is going to win in the category, everyone kind of thinks is going to win the category. So that means investors think, the talent thinks that, the founders think that, and it kind of becomes like the horse to beat. And so there's something about getting that pole position. And you need to take OpenAI as an example versus an Anthropic or some other companies. Like, is Anthropic bad? Or maybe take another example, like an AMD versus an NVIDIA, or are the number two players really that bad? Probably not. But are they like 1/3, 1/10 as good? Probably not. So like the fortune really favors the first pole position company. And so your goal, being good fast and having talent density, is ultimately to get the pole position. And once you get pole position, all the advantages of the market accrue to you, and all the disadvantages accrue to number two and number three, or many of them, I should say. Those are some of the patterns.
So on the recruiting front, do you think that comes ultimately back down to the founder sales skills? And on the other front, do you think that comes back down to mostly like forming your own category or finding your own like innovative wedge? Where do you think?
Yeah, I mean, semantics, everything can be sales, right? In semantics, you could say like this conversation is sales, but it's not really, because we're not. And the way that I'll define that is there isn't an economic exchange happening here. There's some ephemeral thing that by propagating some ideas, applied intuition accrues some brand value, but it's not really sales. Typically is, You're buying one of these three things. I'm going to offer you one of them, and you should buy this one over the other two. That's what very direct sales is. So I think when people say like it's about founders selling a new employee, there's truth in that. There is sales, but really it's actually a more nuanced thing. It's also communicating effectively to them what stage of the company is in and why is it valuable for them to fundamentally look at you and say, I can learn something from you. You can be the best salesperson on the planet, but if they feel that as an engineer, they can't learn from you as another engineer, they don't respect your skills, it doesn't matter how articulate you are. And so I think sometimes people like over index on pitching and selling. It's like, how do you have a great pitch for a company? You have a good company. Like that's how you have, and then the pitch kind of takes care of itself, right? And how do you have a good, how are you convincing in terms of recruiting? You have a good product, which means you have an interesting business that you're building, or interesting technology you're working on. You yourself have something to offer as a mentor, mentee, a manager to the person who's applying for the job. You can call that selling, but I think it's more complex than it's just your ability to sell.
There's also an honesty to you, I think, Qasar, where you're a very honest person. I don't know. There's a culture that you're creating that make people trust you. So I think it's learning, but also trust and that like feel good culture. Like,
Yeah, I would say I don't know if it's feel good. I think people that applied would say it's an intense culture. I wouldn't say it's caustic or intense in intentionally. And you can just look at this through our retention numbers, and the people who work for me are, they've been loyal because I think the culture is more an authentic culture rather than one that's a feel good culture. And it doesn't mean those are opposites. Like you can be authentic and enjoy work. And by the way, if you don't enjoy it, you won't do it for a long time. So it's feel good, but not in a way that it's like, it's just emotional. It's feel good in the way that I feel I'm building skills and and the company's doing well, and I want to be like, there's an old Vince Lombardi line, like winning's a habit, and so is, unfortunately, so is losing. So when talent density meets a winning culture, it kind of reinforces itself. And I think, all of our values, I did a Stanford talk, and I said it could be boiled down to, it's on YouTube somewhere, and it could be boiled down to radical pragmatism. And I think there's a certain type of person, ex-founder, engineer, who that radical pragmatism slash authenticity slash directness slash honesty, whatever, whichever words that kind of work for you, really resonates with. I think it generally resonates with more engineering cultures than cultures that engineers tend to like than not, which works. I mean, Peter and I are engineers, and it's a very technical company. Vast majority of our company is engineering. It's not like 78% of our payroll is software engineering, which is like unheard of. Like it's extremely high. I think Google's like 50-50 to give you some benchmarks. So for our product and for the type of people we recruit, our culture kind of aligns with that. Now imagine if we're building a consumer app, marketing would be more important. And so maybe authenticity would be slightly dialed down more, and let's say excitement or, and the pejorative hype would be dialed up more. You got to do what's relevant for your growth of your business. And for us, the growth of our business, we build really complex software and solving hard problems, and therefore that attracts a lot of engineers who want to work on things like that, and therefore we have a culture that resonates with those types of folks.
How does running a company change from Series A to Series E, managing so much headcount, like managing like the talent bar, right, with that many people?
Yeah. I mean, I think the talent density and talent bar conversation starts really in the first few people in the company that dominoes all the way down. The big differences between, this is the largest organization I've managed. So, even at Google, it was low hundreds. So it was not like this. So this is a large organization now for my standard. It was, there's some giant companies inside of in the Valley. At this stage now, what's different? So it's a new experience, is what I'm saying at this scale. At this stage, what's different is I'm mostly are managing managers, right? Which is different than managing individual contributors. Though I have some ICs who report to me directly, like there's There's an in-house software team that I work quite closely with that builds software just for our consumption. It's not for customers or for outside. But mostly I'm just managing managers, and they're different. They tend to operate, frankly, at a very high bandwidth. I tend not to repeat things twice. I tend not to have to ask for follow-ups. And my rule of thumb is if I have to ask for follow-ups, you're not going to have the job for too much longer. I mean, like, that's just how it is. Oh, I need everyone to be running as an independent senior manager or senior executive, or, we don't have titles in the company, but an SVP. So if I say something, or if somebody says something, just make sure it's not emphasized. Hierarchy is not the most important thing. Actually, almost rots the company if it has to be like Qasar said this or Peter said this. It's more along the lines of communication isn't sloppy. So one of our core values is half the work is follow-up. So if you have to repeat things for them to get followed up, that's a big issue. So when you're a small company, 10 people, 15 people, all those meetings happen basically with everybody in there. When you're 1,000 people, it's a very different thing. So they're like, propagating the message becomes a part of your role as a senior lead. One thing that we haven't left, though, Brian Chesky, the other Airbnb founder, he's been doing the founder mode kind of a speaking tour. And one of the things that he says, which we've instilled from the beginning, was around managers that don't just manage, managers that are actually, functional leads. And we've always had functional leads. That also helps. And I think at this scale, that's really worked out well for us by having that from the early days. So my expectation is the head of design at Applied is the best designer at Applied. It's not that they're a good manager. A lot of times people will say something like, well, that can't possibly be the case where the best software engineer for this specific domain is also the manager. It's like, that's what we got to do. Because that's the person who can recruit great other software engineers or designers or salespeople, whatever they are. And they look up to that manager because they're going to learn from that manager. And the manager's practicing. So they... this last weekend was the weekend of DeepSeek and the explosion of this cheap, model, for lack of better words. And my expectation is Monday morning is the folks who work on that stuff inside of Applied, they have very articulate answers on what's going on. And then we did a conversation, have our conversation in the morning, and they've already read the paper, they've already dissected kind of implications for us in the larger ecosystem, and we have a conversation, we move on. All those things are super different than when you're an IC, when you're managing just ICs in a company of 10. Now it's like it's a machine.
I just wanted to point out how strikingly similar what you just said was to a Steve Jobs quote here, that the best managers, they want to, they never want to be managers. They're the great individual contributors, but know that they have to be the managers to do that job just as well.
And Qasar, one question that I had was, before Applied and Talkbin, there was something that you founded which was called Kamisa, right?
Yes.
And it might have not worked out like the way you wanted to. Maybe it was the timing, but what was some insight that you got from there? Because I see that you're really good with managerial skills, right? You don't get to the scale without learning something from your past. So is there something that you'd like to share with us?
Yeah, absolutely. I mean, I think without a doubt, one of the underemphasized skills that founders have to have is the ability to learn very, 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 very quickly. Like if you got to take the burn, if you get to burn twice to learn the same lesson, you're not gonna be able to get good enough for such a multi-skilled role as being a founder. It's like the well-roundedness of a founder is like totally underemphasized. It's like you have to be good at all these different functions. But for Kamisa specifically, I learned a ton of things. We're a 4-person founding team. That I would never do that again. We were young. We never raised $1. That should have been an indication that we were either too early. I think we were too early, frankly speaking, in the business. We didn't have clear role definition between the founders. I think, just out of temperament, now I can say this, 18 years later. At the time, I didn't realize that it was kind of unacceptable for me to be not be the CEO. It's like that's just the role that I play, and my opinions are too strong. And between a small company and a big company, one thing that is similar on the founder always has to be the standard bearer. So they're the ones who always have to hold the quality bar, whether the company is 3 people or 1,000 people. And I think the feel-goodness aspect or the authenticity aspect of Applied, one thing is absolutely true is people know where they stand when they work with me. And it's not overly positive, it's not overly negative. And I will call out work that's not, I think, at the best level that is possible. It's not even the best level possible for that person, the best level possible broadly. And all those things that, in the first company, we were just young. We didn't know what we were doing. It was based in Chicago. I wouldn't do that again. I think there's a lot, as we said at the beginning of the Chicago ecosystem today, nearly 20 years later, is still talking about Chicago is going to be a great start to the software, ecosystem. And the same is probably true at Austin and Atlanta and New York and Seattle and LA. Like just every event is just about how Silicon Valley is overrated and how they're underrated. And it's like you can that's fine, and there's reasons. Chicago's an amazing city. I think it's probably the best city in America. Like I'm not underside. It's an amazing city, but it's not the best city in America for software. That's probably not even San Francisco. That might be Mountain View. Like it's like then you were really just slicing hairs, but it's somewhere between San Francisco and San Jose is the answer. And a good indication, by the way, this is a tangent, is after COVID, like we're a 5-day in office company and have been, obviously everyone was before COVID, but right after really the government allowed us to come back, we were 5 days in office. And there was a whole view at that time because nobody was doing 5-day in office when we came back. It was, I think, a year before we heard another company even talk about doing 5 days in office. Now, finally, like 3 years later, people are, like really underlining it becoming a mainstream thing again. Those kind of like you could almost say like opinions and views. You're just debating these in Chicago and you're debating these in Seattle. And it's like here, we just focus on actually getting work done. Many, many things I learned, I think, in that first company that I would just so much time wasted. All the time you would talk about should we be in Chicago should have been what are we doing for our customers, and they could have made the company successful. The last thing I'd say that I learned is, and it's tangentially related to the location thing, is the investors matter. I think I always had this view that like they're an unnecessary evil. They're not unnecessary. They're absolutely required. You cannot build a giant. If there was a way to build a Google without venture capital, there would be a Google without venture capital. Even Elon, when he's doing his big companies, and he's arguably the most famous entrepreneur on the planet, raises money, right? And is the richest man in the world who's got huge companies that he's been successful at. He's still, when he's buying X, he's raising money. So.
Why is that? Is it like having the pressure to build? Like, what is it about? I mean, you raised money for Applied. Like, you clearly went all in, and you're like, I need that support system. Like, is there a psychological component to it, or is there like just an
So I mean, we've been profitable for a number of years, so all of our money's in the bank. So like, why do we keep raising money when we're not even using the money? A couple of practical reasons. Number one is to get an outside investor to evaluate the company and mark its value, right? So you would do that in a public market on a day-to-day basis, just based on trading. That has a downstream impact to what is my value of my equity as an employee. If you've got a $100,000 package when the company was worth $50 million, well, that $100,000 at $6 billion is worth a lot more. And it's one thing to say to the employee, oh yeah, this is worth a lot more. It's another thing to say, hey, Mary Meeker at Bond, and Fidelity, these basically public investors, look at our 3 financial statements and said that the company's worth $6 billion. It's probably worth $6 billion. They're calibrated individuals who have no incentive to do anything but to look out for because they're buying the stock at $6 billion. They don't get any upside. They have to see upside after $6 billion. So they have to believe it's worth $6 billion. And so that's one reason. Another reason is if you need the money in order to invest in technology. And we've been fortunate enough where we've gotten revenues to invest in technology. We plow those revenues back in, but it's there. I think there's some level of like intimidation to competitors and people looking at the space. I think, when you take secondaries and other things into account, so we've probably raised $1 billion in the company's history. And we could probably, in a drop of a hat, raise $1 billion. That sends a message to anybody who's competing as like, hey, that's not a weak company. Yeah, there's a bunch of, like everything, multifaceted reasons to raise capital. But I would say if you're like an Elon in that sense, it also is, it's outside validation. Like Twitter is worth X amount and yada, yada, yada. There's a chart that shows. So it's a very beautiful up and to the right chart. We've never used the money, but it looks cute.
It gives you a lot of autonomy as a company to when you're profitable. I mean, that's very rare. Like, you were in Silicon Valley, a lot of companies just burn their cash. Was it the ethos? Because you could just spend cash. It's easy to spend. And you brought this up earlier. It's like you have to be fiduciarily like restricted and make sure people are.
Yeah, I think it's partly our personalities. Peter and I are Michigan guys, and we kind of grew up, middle class. That's part of it. Working class, that should be more accurate. So that's part of it. It's like I don't think I could be wasting money even if I wanted to waste money. Like, it's just not in my DNA or my upbringing, I should say. Then number two, I think it helped us figure out how to, necessity is the father of invention, or the mother of invention, however the saying goes. And so forcing the team to be disciplined, you come up with more creative solutions than let's just pay the next AI researcher some ungodly amount of money. That's not a sustainable way to build a business. It's crazy to me that people are like, oh, I could never work for a manager at Google. And then they turn around and they like raise $150 million and they're immediately under the gun of an investor. Like, that's the same thing. Truly, we are the masters of our own dominion. If next year 2025, we started losing money and we didn't like that, we could just stop losing money by not hiring any more people. As an incredibly fortunate position. And listen, to have 1,000-person cash generating company, there's worse things in the world. Super, super, super rare. We understand the extreme privilege that we have there, and you don't just throw that away. But I think all the people we attract and recruit are also, they understand that, they like that. And the autonomy ecosystem, by the way, wasn't always like that. When we started, the autonomy ecosystem was super into raise money, burn money, raise money, burn money. And as companies like Cruise have had unfortunate outcomes, or Argo, or many smaller companies, we've been the benefactors of that, because there's a Venn diagram of engineers who still want to work on this stuff, but don't want to work in an unsustainable way. And they see that we can fit that. And therefore, we've accrued a lot of talent with people who are culturally aligned.
So the sales team isn't big, but there's a lot of like technical people in your company. Like,
even our sales guys are quite technical. Our head of sales is an engineer.
Why not plow more into sales and generate more revenue?
I wouldn't say that we've been rate limited by the sales team. I think the nature of the work that we do is a long-term. So we, for everybody who doesn't know, like, we make software for vehicle manufacturers, so car companies or a defense contractor that makes tanks or stuff like that. And so those companies, it's really hard to get in. It's also really hard to get out, but it's really hard to get in. And so it's not a matter of just let's hire 1,000 salespeople and suddenly like the sales will grow 1,000x. If I look back at the company history, and maybe the regret would be that we didn't just flood the sales team and have it to be a 250-person team and have half of them being kind of churning out because they're not meeting quota. But so far it's worked well. I think we're just we're very intentional about building the company, and something about me is something in my nature, my instinct is just throwing huge commercial teams at problems doesn't seem like it's the right answer. Like, it somehow forces you to build better and better product that really gets pulled out of your hands rather than just shoved into the pipe.
I do feel like Google was similar in that way in the early days. I remember there was no salespeople in Google for a long time before they had the Google ad team and whatnot. But you came into Google. This is an interesting perspective for me. I think you're like a power networker also. Like, you had the trifecta. It's like YC is a power network, Google is a power network, and then you also had Harvard as a power network. Like, was this intentional, or was this like you fumbled upon becoming?
Fumbled upon it. This is what way? I don't come from a family that has Harvard alums, if it's not abundantly clear. So for me, yeah, I fumbled into it. And, I think my lucky break was getting into HBS. I think mainly because then I just saw your peers kind of set your expectations. And the Harvard Business School, for all the downsides that people have with it, it is an incredibly ambitious group of people who are, generally speaking, quite articulate. And then the second break is getting into YC, and the third break is getting acquired by Google. And so all those things, then they start adding up, right? They start adding to each other. Yeah. But I would. It's funny. Maybe just as an engineer in me kind of chafes at the power networker, moniker. I certainly don't. I mean, I'm positive I don't schmooze and socialize, and but I would say 1/4 of any CEO who's at our level of size and scale. I mean, I spend vast majority of the effort inside the company, and much to chagrin to our team and to the marketing folks at our company who think I should be doing. The reason I'm doing this podcast, by the way, is they're like, I would typically say no, and they're like, do this. This is This is people This is a network. What's the issue? And it's like yeah. If I wasn't doing this, I'd be doing a product review or I'd be doing a customer meeting. It's like that simple. It's just time allocation.
You made our day being on, by the way. So.
It's fun too. I mean, I don't find it to be painful. I just think about my calendar's public to my team, right? So they know I'm in this podcast. And so it also sends a message of what's important and what's not to the leadership. And then they're like, oh, I rarely do conferences and I rarely do this kind of stuff. And so I think that's also part of it, part of my intention in building a culture, which is like, hey, I'm around and Peter's around and all the leadership around. We're always around and we're present. and we want to answer questions. Now, what's that old line about like love is presence? So whether it's for your family and your children, or for for your company, for me, I'd rather put my time there rather than like, let's say, strangers that I don't know, or like outsiders, I should say.
So, Qasar, I know that you were fairly young when you left Pakistan, but there could be so many young aspiring founders in developing countries like Pakistan or India listening to this. If you could share one piece of advice to founders, aspiring founders in developing countries, what would it be?
I would come to the United States if you can.
Right,
It's a-
right. Of course.
It's do it legally. I say this about software engineering because I was originally a mechanical engineer. I'll say this about the United States also. Which is, I have the zealousness of a convert, right? There's none of this. I'd probably be semi-literate donkey boy if I was in Pakistan still in a remote farm. Get to the United States if you can. I think it's better than, frankly speaking, Europe, especially for minorities, and certainly China, Korea, Japan, maybe. Like, there's one thing is like you can come for one weekend in the United States and you say, I'm so proud to be an American. Everyone's like, at the party, people would like, give you big hugs and high fives and drape you in an American flag. Like, nobody would question that. Literally, no. Actually, the opposite would happen. If somebody said, "No, you're not an American," people were like, "What are you talking about?" Like, that would actually be the more strange thing. And so I think it's an underrated for how great it is to be an immigrant here. But beyond that, I think the second best thing that's happened is the accessibility of information now is truly, truly universal. The accessibility of networks and capital is still not evenly distributed, but information is, and you can learn a surprising amount. You can learn, and so if, let's say, I'm in Pakistan and I know everything I know now, but I can't make it to the United States, we'll put that constraint. What I would be doing is figuring out, hey, like, I would learn everything I can through YouTube about building a scaled business. So not a hardware business, not a services business, not a not a small business in the sense that it's a scaled business, specifically a software companies, because software scales well. It's like copying and paste code gets you more money. It's an unbelievable business model. That's why the gross margins you can always see, by the way, a Silicon Valley company, every company will say they're a software company. You can just see them very quickly about what their gross margins are. The gross margins, the first number isn't 7, 8, or 9, then it's probably not a software company. It's probably something else, and really 8 or 9. And so your goal then, or my goal in the parallel universe, would be to build a company that can, like, if you don't know what 80% gross margin is, you should go into ChatGPT and have it explain to you. What is gross margin? How is that different from net profit? What is net margin? All of these things. What are these? And you have to learn these things. You have to be very good at these things. And you don't need a college degree. You don't need a validation of a system like Harvard to say, because that system works here because it's just filtering mechanisms. We can quickly assort who is worth the time and who isn't. But when you're in a developing economy, when those systems and sorting methodologies don't even exist, your goal then is immediately provide value. And so you just forget all the signaling of going to top universities or whatever, and you just create a product. And that product can, if it's very good, for that local market can be huge. Pakistan has 220 million people who live there, and even basic internet services don't exist. So you figure out, how do those basic internet services work in the United States, whether it's local messaging, a local AI company, a local Uber competitor, a local DoorDash company, whatever it is, you can do that's low-hanging fruit. But truly, because you're on a global competitive ecosystem, you can actually build things which can be regionally and can compete in South Asia, if you're Pakistani Indian, Middle East, North Africa, if you're in Egypt or somewhere around there. I think you can do a lot actually now. I mean, I think it's a surprising amount. Now, if you're really, really poor, you can't afford electricity and a laptop, then you have to get to there. But if you're listening to this, you probably have enough access to some basic fundamentals. And I think that revolution, by the way, will happen in the next 20, 30 years, which is like what Steve Jobs said is, again, this is terrible. He said, the 60s really happened in the 70s. He's talking about culture and music. And for us, like, the internet is now really happening in the rest of the world, even though it happened in the United States in the 90s and the early 2000s. Now the ubiquity of connectivity is happening through mobile phones and information and through data accessibility. And so now you have people learning and consuming. And that's why, like, the biggest social media countries are like Saudi, which is like very counterintuitive. So Yeah, in a developing world, I would learn as much as I can, and I'd build a business for the local ecosystem. There's two ways to take the fact that the markets are very unsophisticated. One is, woe is me, I wish I lived in the United States and I could work at OpenAI. The other is, this is phenomenal. I can build fairly basic apps and become like a juggernaut. And like even basic apps are not well done in countries like Pakistan. Like very basic apps are not well done in Pakistan. They're poorly done. They're poorly built by even though there's good engineers. So there's like that standard of quality. If you bring high quality to the developing countries, you could take some fairly basic applications and get some strong user base in them.
I think this was the concept that I was actually thinking of, which was the surface area of luck, right? And I totally get your whole point about signaling, but I think it's not in the next 20 years. I honestly think it's happening now because if you just look at what happened just in the past week with DeepSeek, under 20 members team, $6 million, just the entire model being built on $6 million,
Yeah,
and
I mean,
now,
let me give just one small caveat there. I think some of that's bullshit.
yeah,
I
that
think
is true. That
like
is true.
you're right.
That
It's
would be
like part of it's like the Chinese propaganda machine, which is like which will amplify that. Part of it's our own fear. The reason why this DeepSeek story has taken the world by storm is it plays into all these narratives that our brain wants to already connect. Like China's the big bad enemy. They're so much smarter than us. They're so much more efficient than us. We're fat and lazy and stupid and wasteful. So just be careful. Just be careful on that. Let's say DeepSeek is as big as OpenAI or as big as Meta. Like, let me put it another way. Imagine if the same open source model had been released by Meta. We probably wouldn't be talking about it.
yeah, yeah. The
Like,
Llama
oh,
3.5, yeah,
yeah, it's
exactly.
so good, Llama 3.0, but it wouldn't be like, we're expecting Donald Trump to make an announcement about that, right? Right. So also recognize there's some level of like, so it's like there's some corporate propaganda happening there.
But don't you think the end product that the end consumer gets, like in the developing nation, he doesn't really care about how much the CCP has put into running the model. They have an R1 model running in their NVIDIA, right? They can
Yeah.
literally host the entire model, and now the whole concept of moat doesn't exist. Like I kind of feel like OpenAI doesn't have a moat anymore. I think it's the way for the GPT wrappers,
Yeah,
which people used to talk
let me
trash
push back
about.
on a bunch of these things. So number one, in the land of the blind, the man with one eye is king. So if you have no other choice but to use a CCP model that is taking all of your information and streaming it right to the Politburo, yeah, you'll use the model. But if you have a choice, then that might be different. And if you're Pakistani, which has a strong alliance with China, as an example, it's not going to be a big deal for you. If you're Thai or if you're Indonesian or whatever, maybe you don't, Brazilian, you don't maybe care because you're not caught up in the, let's say, Western China. But on the moat aspect, that's a great question, and I think that is the extremely volatile foundation model space that we're in right now. Like, I don't know if I would be putting money into foundation models if I wasn't like truly putting money into foundation models. Like this is like poker, not for the faint of heart. So I don't know if I don't know if there's a moat. It's a great question. I think it's a great question. So so I agree with you on the moat part. I disagree with you on privacy. I think it's just because people, they don't have anything, so they're going to take whatever is given to them for now.
Yeah, yeah. Like Naval says in a recent tweet, you don't really have to go scrape the web. You can directly scrape the model that already scraped the web and
Yeah,
build the model.
exactly. I mean, it's a super interesting time, to be alive. I mean, the future's always been better to be alive than the past. I mean, I feel like the past is like no toilets and drinking water. That sounds awful. The future, at least the best luxury, by the way, we have by far is not access to ChatGPT. It's like access to hot water. So good to have like a hot shower.
Well, there's one question that I really wanted to ask you, right? So, Castor, like looking at the future, right? There could be a scenario where only autonomous vehicles could be permitted on roads, with
Yeah,
human-driven cars, possibly being illegal due to safety
will
or
happen.
efficiency
Absolutely will
errors,
happen.
right?
Yeah, absolutely will happen. Yeah.
Interesting. Yeah, I think that was the end of the question actually. But is there a way you guys are at an organization level are applied? Are you guys have some policies in place or like a mindset in place for
Yeah.
for the
I
future
think
of this?
it will absolutely happen, but probably not in our lifetime. Like that's probably, the answer. The vehicle replacement rates, it takes 50. You buy a Honda Accord today, 15 years before you get rid of it. And we privileged, wealthy people in Silicon Valley, maybe we change our cars every 3 to 5 years. Most of the world doesn't. There are cars that were made in 2010 that are the daily drivers of lots of people, and they are not going to move that. Even for a self-driving car, they're not going to, because they can't afford it. Remember, 2/3 of Americans live on a paycheck. They're not buying a self-driving car the moment it emerges. And you could say, well, there's a rideshare model and yada yada yada, and that's how subscriptions snuck into like squeezing that last dollar out of the, essentially bottom of the economy, which doesn't have enough money to survive. But that's very different than a very expensive product that you would buy that would be personally owned. But self-driving is definitely, it's not like crypto or some other things where there's like lots of speculative reality of like, who knows what will happen. Autonomy will definitely happen. Like there's absolutely no doubt. It's safer, it's more efficient. Safety, convenience, and cost are the drivers of consumer purchases. And like it hits all three. Like you get one of those three and you got like you take a WhatsApp as an example, it's better than text messages. Takes off immediately. And if you get all three of those, like the market will suck that product faster than you can make it. So it's just right now it's still expensive, but it's definitely more convenient. It's more safe. So all those things as they get better and better and better, and they're like a full 3 value, I think it's absolutely inevitable. Everything that moves was going to be autonomous. There's no doubt of that. So I'm super happy at, like, let's say the positioning of Applied as being a technology provider across the ecosystem. You have, like, let's say the Waymos of the world that are doing robotaxi, Tesla that's doing it for one company. We kind of do it for everybody, and that's a good position to be in, or at least I'm happy to be in.
But this was phenomenal. I learned a lot, actually. You were dropping knowledge very quickly throughout the podcast. So it's a lot of fun for me, and I appreciate you coming on. And, we'll do it again in the future for sure.
Yeah, thanks for having me. Appreciate it. And great to see you again.